So if you watched some of my previous videos, like way back, I'm talking like 2017, early 2018, you know that I was invested in Chinese stocks like Tencent, Alibaba, JD, and some other ones as well. But over time, as those stocks rose in price, things like the trade war started coming into effect. I saw a lot of government risk happening between US and China, and just a lot of political stuff that had an impact on these Chinese stocks. And at the time I decided it wasn't worth the risk holding them, so I cut those positions and moved on with my gains. So really over the last few years, the only stock that I still hold that's a Chinese name is NEO stock, and that's done quite well for me. And honestly, if you asked me a year ago, hey, would I be buying any of these large Chinese stocks, I would have said, there's no way that's happening. If you asked me 6 months ago, nope, not happening. Heck, you asked me like, 2 months ago, I would have been like, no, not interested at all. But things have changed. I've changed my mind on this investment class, and I have started buying the most obvious undervalued Chinese stock out there, which is Alibaba. Yes guys, that's right, BABA stock is a brand new stock in my investment portfolio. Now before you go in the comment section and say, oh hey, this is a risky bet, why would you put your money in Chinese stock, why'd you change your mind, you're flip-flopping, all this other stuff, a good investor looks at the facts, and facts change from time to time. And right now, guys, the facts are telling me that Alibaba stock is a no-brainer investment, so hear me out. Alibaba is no new company. You guys have pretty much all heard of Alibaba, especially in recent weeks with Chinese stocks being kind of front and center in terms of fear and headlines and all that stuff. So you guys know what Alibaba is, right? It's a massive company that's primarily focused on e-commerce. However, they also have other business segments that are doing quite well. We can see here that e-commerce is their biggest revenue driver, but they also have a growing cloud segment business, they have digital media entertainment business, and they have other initiatives that they have their hands in. So it's kind of truly a tech conglomerate, if you will, similar to ones like Amazon or Google. Amazon isn't just an e-commerce company, they do so much more. Google isn't just a search engine company, they have a lot of other services. Just like that, Alibaba is not just an e-commerce platform, they do a lot of other stuff and they do it quite well. So the question you may be asking yourself right now is, why Alibaba and why now? So I'll tell you this right off the bat, Alibaba is the one that I'm most comfortable with out of all the other large tech companies out there from China, like JD or Baidu or Tencent. They're decent companies, but Alibaba to me is probably one of the easier ones to really grasp, understand, and just see where it's going, because we've seen Amazon prove out this model over time, and I think Alibaba has a very similar mindset in terms of their execution, and I think they just keep doing what they're doing, they're going to be just as large, if not bigger, than Amazon in the future. Think about it, Amazon's core really is the US, which is like 300 million people, but if you look at Alibaba's core, it's China, which is over 1.5 billion people. So the potential just in their domestic market is huge. Now here's the thing, over the last few years, if you look at paper, you look at fundamentals, metrics, it was no secret that Alibaba was a pretty attractive stock. Revenues was increasing substantially, easily growing double digits year over year, despite already being such a large company. Net income was exploding with over $20 billion coming in the last year alone. And the business was flush with cash on their balance sheet to keep expanding, investing, innovating, just do whatever they want with to keep the business going. If this was an American business and we saw these fundamentals, I have no doubt in my mind this would easily be a $1 trillion company, if not a $2 trillion plus company today. But the reality is, it's not, and the stock does trade at a discount because it's not. As of today, Alibaba is worth $541 billion, despite these incredible metrics that the business puts up time and time again. And you can also see their current PE is a 23.66, which is cheaper than the overall market, which is above 30 right now. Now, I've been watching Alibaba for a long time. Yes, I haven't been investing in the stock the last few years, but I've been watching it from time to time, right? It's on my watch list. I see the stock hit 300, I see it then drop below that 200s, 250, low 200s, and then finally, the last few weeks, we dropped under 200. I'll be honest with you guys, back when it was, say, in the mid to high 200s, say like 270, a lot of you were saying, hey, you should look into Alibaba, it's a good opportunity. And I was like, yes, the fundamentals look very good in this company. However, there is risk holding this business because of the Chinese name and all the stuff that goes around with it. Whether I agree with that or not, it's the reality of the situation. And I didn't feel that the Chinese risk was really baked into the stock price. Now with the stock under $200 per share, I think it's baked in quite well, and I think it's gotten to the point now where it's just super irrational for the stock to be this cheap for what it produces. Investors are now panicking, this peak fear, FUD everywhere out there. If you look at the daily charts for Alibaba, this day right here was when I think we hit peak fear in the stock, and that's when a lot of weak hands dumped their shares on fears that Alibaba was going to $0 per share. I love it when I see this kind of irrationality in the market, and I always try my best to take advantage of it because, history's proven itself time and time again that when these things happen, they're buying opportunities. It's happened before with other holdings of mine, and I think that Alibaba is going to be added to the list of a multi-bagger stock for me. But let me just be completely frank with you guys. There's still a lot of risk owning this stock. It's still a Chinese stock at the end of the day. You're still owning a shell company theoretically. So I wouldn't go all in on this and put my life savings in this business. There's no way. I don't do that for American businesses either. Tesla is my largest position at like 20% allocation, and that's as much as I really want to have it at. So to say that I'll be going in and putting in more than a few percent into Alibaba, it's not going to happen. But hey, never say never, as they say. Maybe things change in the future. Things get much safer. You actually own part of the business instead of a shell company. If all those things happen in time, then maybe it's possible that Alibaba becomes a large position for me. But as of right now, I have to control the size. It's just really hard to look at this chart, see the stock down 44%. And, when you look at levels, it's back to where it was when I sold it many, many years ago. And it's attractive because during this period of time, guys, Alibaba as a business has improved significantly. So you're paying the same price for something that is a much, much better asset. From 2018 to now, here in 2021, we can see revenue has grown almost 3x and gross profit has more than doubled for this business, despite them spending heavily and reinvesting into their company and expanding. Their assets to liabilities has improved from 2.55x more assets than liabilities to 2.74x most recently, so you have improving fundamentals here as well. And during this time, debt has increased for the company, but only modestly relative to the business, so nothing of concern here with insolvency or anything like that in my opinion. But again, numbers for this company has almost always looked attractive. PEs, price to sales, EBITDA, margins, everything looks good. But that Chinese risk was always lingering, and quite honestly still is lingering. But I think it's baked into this discount here. Now, another reason I like the stock today is just because of the pure panic out there on the streets, guys. The FUD that's being spread with the Chinese government trying to, destroy their companies. Let's be real. The Chinese government is not going to try to destroy companies like Tencent and Alibaba. Those are world-renowned companies that represent China. They have massive respect on a global scale, and China is extremely proud of these companies. They're not going to try to just push them off to the side so that they're irrelevant. They're not going to do that. It just doesn't make sense from a government or even a country's perspective. All they're doing, in my opinion, is that they're regulating these companies to make sure that the competition is still able to kind of grow, thrive. They can have more Alibaba type companies in the future, because if everything's closed and monopolies and that kind of stuff, it cripples innovation over time, it limits growth over time, and consumers are not happy, people start moving, international companies may start taking some business away, and the government doesn't want that, right? So it's just kind of my opinion that they're trying to be proactive now, they're trying to make steps right now to make sure that these businesses are set up for success in the future on a global scale. The big difference between the US and with China is that in the US, these changes take time. The government's always after big tech, Facebook, Amazon, Google. They're always after them to change, stop monopolistic behaviors. They're always in front of the Senate, there's hearings, all this other stuff, right? it takes time. In China, it can happen overnight. It can be like, okay, this is how it's gonna be. It's happening, we're doing this, and that's good and bad, right? Because the government kind of has final say, right? It's like, this is how it is, deal with it, or just don't do business here. And obviously these companies want to keep doing business in China because they're thriving there. So they're going to just comply with the government. They're going to change their businesses a bit. They are probably going to get hurt short term, you know, Tencent especially, with the whole music licensing issue. They're definitely going to get hurt short term. But that doesn't mean these companies are going to fail long term. I think they're going to be just fine. A good example to think of competition, how competition just helps everything thrive, is you can look at Amazon, right? Amazon's a pretty good comparison to Alibaba in China. Amazon has stuff like AWS, for example. AWS is dominating #1, but they have massive competitors. They have Azure, GCP, IBM Cloud, even Alibaba competes with them, right? And yes, while that has taken away some business from Amazon, it has still helped them grow the segment, thrive as the leader, and I think that's what's going to happen with Alibaba with these changes that the government's trying to make. Now, those weren't reasons enough to look at Alibaba's stock. Another big reason for me personally was when I looked at the charts, looked at the technicals, and it said, this one's a buy. Currently, we're testing the 200 moving average on the weekly, which is a strong level of support for Alibaba. We've only tested this once before, guys, in 2019, and since then the stock has climbed from a low of around 130 per share to a high in late 2020 of around 320 per share, and that's almost a 250% gain in less than a year, which is absolutely outstanding returns for any investor. Could we see these gains again? It's possible, but it may not happen in the next year. It could take many, many years to play out. But I think it is possible to see this over time. We are seeing fundamental changes in China, which are going to fundamentally affect these businesses. So we're going to take time to really see the effects of all of that play out with Alibaba and its competitors. But like I said, I'm confident that this will be a good thing for them net in the future. Now, with all that being said, all this positivity with Alibaba, I think that there's still risk with the stock, so I've put it in my spec portfolio. This just means that, you know, I'm not willing to really bet the farm on these stocks. I'm not willing to go over a certain percentage allocation. I'm always going to monitor these positions, and I've accepted the fact that I could lose it all in this investment. Could go to zero. Who knows? Maybe I lose my rights to my shares. Who knows? It's a possibility, which is why I will keep it as a small percentage. And the reason that I still want some exposure, even though there's that risk, is because the upside is just so big. I could double, triple, quadruple my money in the stock over time. And I think I'm willing to take that risk here with Alibaba specifically. For transparency's sake, my cost base on Alibaba right now is $193.82 per share, and I will most likely be adding a little bit more here in the coming weeks if we remain under $200 per share. I like it under that price. I keep buying it under that price. If we go above it, I may add a little bit more, but if we significantly rally higher, that's probably just going to be my position built, and I'm just going to leave it at that. On the flip side, if we drop well below 180 per share, probably accelerate my purchases, probably buy more shares quicker than I anticipate to, but hey, that's just the investing game. I'm excited to be back in this stock, and I hope that, you know, if you choose to be in the stock, you understand the risks, but together, I think over time, we'll make a lot of money here. Guys, I hope you enjoyed this video. Don't forget to invest positively. Let me know if you're invested in any of these Chinese stocks, and I'll see you in the next one. Peace.